Welcome to the Spokesman Speaks, a podcast for farmers and ag professionals by the Iowa Farm Bureau, bringing you the news, experts, and educational insights that matter most. Now, here's your host.
Welcome to our September 1st edition of the Spokesman Speaks podcast. I'm Andrew Wheeler. With harvest just around the corner, I'm sure many of you are anticipating a bumper crop and wondering how to make the most of it. Today, we're bringing on two of Iowa Farm Bureau's in-house economic experts to share their outlook on crop and livestock markets. Dr. Christopher Pudenz, who is Iowa Farm Bureau's economist, and Zach Brummer, who serves as our Farmer Education Program Manager. Spokesman editor Tom Block sat down with Zach and Christopher last week.
Zach and Christopher, thanks for sitting down with us today to talk a little bit about markets. Starting off with the crop market situation, sitting here just ahead of harvest, the USDA predicted record yields and productions. Various scouting tours and yield checks are backing that up, that even if it's not a record, Zach, there's going to be a lot of crop out there. So how is that affecting the market, the supply situation, and what should farmers be thinking about as they climb into their combines here this fall?
Yeah, so it's kind of interesting. The August WASDE came out and really shocked a lot of people, not because of the increase in yields, which were expected. We went from 181 bushels projected in July to 188.8 on corn for August. Again, the market kind of saw that one coming, but what we really weren't anticipating was the acreage shift, nearly 2 million bushels of additional corn acres being planted, again, from July to the August WASDE. And so those two things combined resulted in a production estimate of 16.742 billion bushels. A record, as we mentioned. So on the corn side, as we're getting close to harvest here, I think one of the big things is that producers are largely undersold, I would say, compared to maybe years past. There just hasn't really been very many attractive opportunities out there in the market leading up to harvest this year. And so how we navigate that going forward is really going to be the big question. And if these current WASDE projections come to fruition, making sure that we maintain our demand centers and chew through that crop is going to be critical.
Yeah, you mentioned that there haven't been a lot of opportunities for farmers to make profitable sales at any point this year. So with a lot of this crop probably headed into storage, what role does crop insurance play and farmers just looking for a profitable price? How can they find those profitable prices and make some incremental sales?
Yeah, I think as much of the crop that can be stored will be. We don't have the ability to store 100% of our production, never mind during a year like this year, which is, again, projected to be a record from the production standpoint on corn. I think that the critical piece here is that there's kind of this mentality, right? So if you have crop insurance, and let's say you're kind of at that 80% coverage type level, without even having to consider your production history, you've kind of got this floor built in at 376, given where we were at. I believe it was 470 was the spring reference price. I'm doubting that the fall harvest price is going to be higher, so I'm using that kind of as my figure. But so with a 470 reference price at 80% coverage, you're looking at a 376 kind of floor there. And so a lot of producers look at that number and go, I've kind of got this floor, and so I'm not going to get too aggressive when the price, it's above that floor currently, but it's not an attractive number, and I haven't even harvested the crop yet. So that's really led to a lack of producer selling this year on the forward bushels. We did get a pretty significant rally there in February, if you recall, really the end of January into the first half of February, and we saw producers sell a lot of old crop. They got pretty aggressive on the production that they had just taken out of the fields last October. So compared to where we were at this point last year, where producers had a lot of old crop in the bins and were having to sell it at depressed prices in order to make space for what at that point was also projected to be a very significant crop, we're in a much better position this year. There's less old crop out there in the country. It's moved already. Producers, again, took advantage of that earlier rally. And so that's a plus. It's just how are we going to navigate this big crop that's coming off here in another 30 to 60 days?
And similar situation on soybeans in terms of profitability, despite the fact that those 2 million acres that went into corn, a lot of those came out of beans, so we had fewer soybean acres. But yields on soybeans are still supposed to be a record per bushel, and prices still are very challenging for farmers.
Yeah, profitability really at any point throughout the growing season this year has just been hard to come by. If you're looking at, just as a reference point, I've used Iowa State's cost of production projections that they release every year. And on corn, we've had a few opportunities where we were just slightly above the break evens. On soybeans, we just haven't been able to get to a level that got us above those break evens. And again, those projections use, they assume that you're paying something for your land, et cetera, et cetera. So you can check those out. They're on the Ag Decision Maker there. But on the soybean front, again, the USDA moving those acres out of soybeans into corn, very helpful on the soybean side. I believe we're at 7-week highs, give or take, at this recording for November soybeans. So we've seen the market really respond favorably to that tighter production and via that tighter ending stocks. What's critical on the soybean side going forward is that, A, we maintain our demand centers, but also you mentioned that I think it's 53.6 on the soybean yield per harvested acres, our current projection. So that is important from the standpoint, that's a record. And so if we don't meet that record, we're going to lower our total production, which will make an already tight balance sheet that much tighter. So I do see a lot of opportunities on the soybean side as we move forward, both from perhaps some lighter production, but also if we don't have the demand hold in there, especially on exports, which we're already seeing some challenges there with China not having any forward purchases on the books at this time for the 25-26 crop year, as well as the current sales elsewhere for 25-26 being at a 20-year low. So there's some real questions there. In the meantime, we've kind of got crush demand maxed out or close to it. And so there's really not a bunch of places in the balance sheet to add additional demand as we move forward. So those are kind of the two things that are battling right now. The good news on soybeans is that little moves will have the ability to make big differences in our price. Whereas in corn, just the size of that crop, it takes a more significant adjustment to give us some price support going forward. So those are the two things we're kind of battling right now.
Zach, are you willing to take an over-under on corn and soybean yields?
So I was reading today that one of the crop tours that was wrapping up kind of pegged corn and soybeans, for that matter, yields under what the USDA had recently come out with in August. And so since the USDA released that report in early August, there has been some, it's gotten a little drier, and there's been some southern rust and some other challenges to the crop that maybe weren't as present when the USDA was out putting those numbers together. So I think we could see a revision here in September, perhaps a little lower on the yields, but we'll have to wait and see. At this point, I think that the numbers, specifically the yield numbers, are probably top-endish.
Important to note, when the USDA does these numbers, they're assuming normal weather going forward. Right. And we are, like you said, on the dry side, some diseases and things like that settling in. So it's anyone's guess, but it'll be certainly worth watching. From the demand side, let's pick up on that. You touched on that a little bit, but Christopher, despite all the uncertainty with trade and tariffs, exports for old crop at least have been very strong, including a record pace for corn. What are the reasons for that demand, and do you see that continuing?
The reasons for the record corn export demand is that, quite frankly, over the past 5 to 7 years, really since the first trade war that we had in 2018, corn has done a really good job of diversifying internationally, such that when the Chinese demand for U.S. corn fell out of the bed over the past 6 to 12 months, not even, I don't think, even in a top 10 status anymore, perhaps worse than that. They're not buying a lot of corn from us anymore, and it doesn't matter for our international exports. We are doing a great job of marketing corn into other markets, Mexico first and foremost. Do I expect it to continue? Well, USDA does. USDA expects us to next year set an additional record on top of what they're expecting this year to be overall record export demand situation. In some sense, we need it to continue, given how much corn we have growing out there in fields right now. Zach, I'll pitch it to you if you have any other commentary on that.
Yeah, corn export demand feels really good, where that's a big question for soybeans moving forward. I'm really not worried, and the market really doesn't appear to be worried about the continuation of the strong demand that we've seen this year. Mexico remains our number one buyer on the export front, corn-wise. One of the things nearby that is aiding us is that the Brazilians, their production, they recently had their currency, it was at a all-time low compared to the US dollar. It has since recovered, making them less competitive in the global marketplace. And that, combined with futures levels above where apparently they believe they should be, have resulted in those producers down in Brazil being rather slow to pull the trigger on additional corn sales. They're holding a lot of corn, and that corn is going to find its way to the market. It's just not doing so currently. And so that has opened the door for us here in the United States to continue to get those sales on the books. We're happy to have those, especially with the crop that we have coming at us.
How about the trade situation overall, including livestock and meat? Several deals and frameworks have been announced, with more promised with the Trump administration. Just got some more clarity on the deal with the EU. Are these deals good enough to keep the crop and meat demand going strong? And what could happen here as more frameworks are announced?
Yeah, it certainly feels like a year for Iowa farmers, especially to market their grain through their livestock. That's an old John Lawrence thing from Iowa State, for folks who recognize that name. In terms of beef exports, so far this year, for the first half of the year, beef export volumes were down 6.5% year over year compared to a similar time frame in 2024. Some of this is supply related. We're certainly in that trough of the cattle cycle. Everyone's hunting for signs of rebuilding. No one seems to be finding it quite yet, at least nothing meaningful. Breaking that down market by market, exports to Korea were up 8%, but exports to Japan were down 2%, Mexico was down 7%, and China and Hong Kong were down 28% for that first half of the year compared to 2024. So clearly that one's the outlier, right? And what's going on there? Well, the China market is basically entirely closed to U.S. beef packing plants, except for a couple plants. And that's because the Chinese government let the plant registrations for those beef plants expire. Certainly a non-tariff trade barrier that they're wielding as a weapon in the ongoing trade spat that we're experiencing. And to just cement that as the reality, they renewed many pork and poultry facilities this spring. So that is definitely a weapon that they're wielding in this ongoing trade back and forth that we're having with them. The fact of the matter is, though, that supplies are so tight and domestic demand is so strong that we're doing just fine on the beef and then cattle price side of things here in the United States. Bouncing over to pork here for a moment, 2024 was a record year for both volume and value in terms of U.S. beef exports abroad. We exported a record 30% of pork and pork variety meats that we produced here in the United States in 2024. In 2025, despite all of the hubbub, all of the news articles, all of the discussion about trade, U.S. pork exports have held up surprisingly strong. According to USMEF, for that first half of the year, again, January through June, total pork and pork variety meat exports were down only 4% from the same period in 2024. And this is due to substantial reductions in some of our major Asian markets. China and Hong Kong, Japan, and South Korea are all down double digits. But on the other hand, purchases by Mexico, which is far and away our biggest pork trading partner, were up 4% in the first half of the year. And an astounding 40% of our pork exports so far this year have gone to Mexico. So Mexico is and remains a fantastic trading partner on both corn and pork. You mentioned the trade agreements that we've had. We have made some progress on the meat front, which is tough sledding. To make any progress at all on the meat front is a real challenge. A personal favorite of mine is that after more than 20 years of having no market access for beef into Australia because of a 2003 BSE case, we finally have access to that market. How much beef will we actually sell to Australia? I don't know. Australia is a major beef producer and exporter themselves, but I bet we can make some inroads there into their high-end restaurants because at the end of the day, our meat product is simply just better than theirs. You hear that all over the world. Some other trade deals that you mentioned, we had that first trade agreement following Liberation Day was with the UK. We secured some preferential access wins for beef in that trade agreement. You mentioned the EU. And some details announced just last week. The EU agreed to provide preferential access for U.S. pork, which is going to be an important thing as their pork production declines on into the next decade. They also said that they'll address some of their notoriously protectionistic non-tariff trade barriers, including the EU deforestation regulation. And that'll impact hogs, but that'll also impact beef and cattle. That is going to have major implications for beef and cattle because that's one of those 7 commodities on the list of products that the EU says you have to have this documentation for. So wins there. How much of an impact will those have long term? Proof will be in the pudding. One outstanding market that you might have noticed I haven't mentioned on the trade deal front is Mexico. That one's still hanging out there, trying to get something nailed down there, I suppose. That one is important. If things go sideways between the U.S. and Mexico, Iowa farmers will feel it in their pocketbook on the pork side and on the corn side.
And you mentioned there, one of the advantages we have here in Iowa in regard to overall economic activity is that balance between crops and livestock. Great quote you had there from John Lawrence. When crop prices are low, we typically see a rise in livestock feeding. And while nationally the cattle herd keeps getting smaller, are we seeing some increased activity in Iowa in terms of cattle feeding?
Yeah, actually we have. I went and pulled that data this morning from the latest cattle on feed report that came out last week. And nationally, cattle on feed were down 2% year over year for August. Placements were down 6% year over year for August. And that was nationally, right? In Iowa, cattle on feed were up 6% year over year, and placements were up 18% year over year. So not only are we feeding cattle, but we're placing cattle on into the future. What's the discrepancy between Iowa numbers and the national numbers? Well, Texas and Colorado both had pretty substantial declines. Texas, in large part due to New World screwworm. They import a lot of Mexican cattle and feed them in their giant feedlots in the Panhandle and other places. Well, the U.S.-Mexico border is closed to cattle and horses and things like that. And so they're struggling to source cattle the way they were before. I know that increased cattle placements aren't everyone's story, right? This data is specifically for feed yards that have more than 1,000 head capacity. And there are a lot of farmer feeders out there in the Iowa countryside that don't have, 1,000 plus head capacity. I've talked to several cattle feeders myself that I know personally or through work that, they have capacity for a couple hundred head. And for the first time in a long time, their pens are empty. Just when they sit down and run the numbers, the feeders are too high. So I know that Iowa being the place to feed cattle isn't, the story across the board. But Iowa does remain a great place to get involved in livestock. I love saying that, right? But I'm not the only one who's saying that. There are some big companies who are putting some serious money behind that sentiment. Lincoln Premium Poultry, which raises chickens for Costco. They did a series of grower meetings sort of on the west coast of Iowa earlier this year, trying to recruit more growers here in our state for their plant expansion. JBS announced a sow plant in Perry earlier this year, and they also purchased an old Hy-Vee building for further processing near Ankeny. So there are some companies putting some serious money into livestock production and processing here in the state. That bodes well for young farmers because a lot of times livestock agriculture is the way that young folks get a foot in the door.
Another interesting piece of the balance sheet to consider when it comes to livestock is on corn, the feed and residual numbers right now are projected to be a record 6.1 billion bushels as of the August WASDE. Again, the demand centers are just going to be critical that we maintain those. When you look at the corn for ethanol use projections, they are just shy of a record at 5.6 billion bushels. When you go look at the soybean crush demand, it is also a record as of the August WASDE. And what that's going to do is it's going to, assuming that comes to fruition, it's going to create a heck of a lot of distiller's grain, a heck of a lot of soybean meal, and naturally the 6.1 billion record corn that's going to go directly into the feed and residual on its own. These three products are going to be fighting aggressively for space in the ration. And so, if you're feeding animals, it looks like a very strong opportunity going forward here from a cost related to that. But so maintaining that demand is going to be critical, and how those kind of fluctuate as we move forward, and which commodity wins out, so to speak, might have a bit of a significance on the outcome.
Let's talk about some broader economic factors that have a big impact on farmers' bottom lines, especially as they start thinking about buying inputs and securing financing for next year's crops. First of all, are there any indicators showing signs of an interest rate cut?
Unfortunately, the Federal Open Market Committee, which is the committee of Federal Reserve folks who set sort of the benchmark interest rates, they find themselves between a rock and a hard place. The rock is that inflation has come down, but it's not come down to their 2% target. The hard place is that the most recent jobs report was pretty weak. There were substantial revisions to the previous couple months as well. So they have this dual mandate. On one hand, they try and keep inflation low. On the other hand, they try and keep employment up. Those things are sort of working against each other in their decision making right now. All that to say, do I think they will cut interest rates this year? Yes. Fed Chair Jerome Powell said after they got done with their Jackson Hole summer meeting, he came out in his speech and basically opened the door to cuts this fall because he's becoming increasingly worried about the employment situation, and particularly the unemployment situation. Unemployment is ticking up a bit. Word of caution, though. Remember last fall when we had a couple rate cuts and everybody was really excited, right? That, operating notes are going to come down and mortgages are going to come down. That's not exactly what played out. Like the market said, Fed, I think you're cutting a little early. We're going to build in a little bit of inflation into our 10-year Treasury notes or into our long-term mortgages. And just now, basically a year later from when those rate cuts started, are we seeing mortgages come back to where they were a year ago? I think they bottomed out in September and then went up again, had a little bit of a downward move in December, but then they've been high most of the year. And so that long-term financing is related to that baseline Fed rate, which we are likely to see cut once or more this fall, but they don't always move in tandem. So the hope is that if we do get a rate cut, that the long-term financing does move with it.
How about the overall economy? Prices are slow to come down. I've seen some things in regard to fertilizer prices versus corn prices, almost at record highs there. Deere just announced more layoffs and very poor earnings. We've also seen a lot of talk in the media about these beef prices. Any worries about a recession and how that would impact the demand for food?
Am I worried about a recession? Yes, Tom, that's my job, to worry about a recession. If the Fed does cut rates this fall, it's not because they think the economy is doing well. They'll cut rates because they think the economy is performing poorly. So that is just something to keep in mind. Right now, though, I am most directly worried about Iowa farmer balance sheets. Data shows that Chapter 12 bankruptcies ticked up in the first quarter of this year. And I don't know if we're going to be able to bushel our way out of this one. Even with a record crop, if you're losing money on a bushel, it doesn't matter how many of them you have, right? You're just losing more money. Going back to the broader economy, there certainly are data points that make me a little nervous. Credit card delinquency rates are high. Not only are the number of folks who have been delinquent high, but the total amount of debt that is delinquent is high. Also, there are a lot of unsold houses on the market right now. There are a lot more houses for sale than there are people buying houses. So just some of those typical recession watch indicators that are trending in the wrong direction. Typically, recessions aren't good for meat prices. That is kind of one of those things that people tend to pull back on. They'll either trade down within a segment or they'll jump proteins entirely. But beef demand remains strong and is getting stronger, not weaker. Every week, it seems like there's another popular press news article talking about how beef demand was, even stronger this month than the previous month. Something to watch is pork demand. Domestic pork demand on a quarterly basis was weaker in quarter 2 of 2025 than it was in quarter 2 of 2024. And the same for quarter 1. It was weaker in quarter 1 of 2025 than it was in quarter 1 of 2024. So that's something to watch. Like, what happens to retail pork demand if we do dip into a mild recession or something like that? I'm a little more worried about that than I am about the beef side of things.
Well, guys, I know farmers will be focused on harvest here as they get into the combines the next month or two, but we also know that these numbers in these markets are worth watching. These numbers are big numbers, but they can change in a relatively short amount of time, either positively or negatively. Also, sure to be educational opportunities this winter. Anything on the horizon that they should be watching for from Farm Bureau?
I guess I'd point you to iowafarmbureau.com, and then under our webinars tab there, one of the resources that we actually already have out there are some recordings on pre and post harvest marketing plans. And so I would definitely check those out here this fall, either before you get in the combine, but especially once you wrap up and maybe start spending a little more time in the shop as things get a little colder. Those are valuable resources and can give you some ideas. Up and coming, we're going to have our annual tax webinar. We usually have several hundred folks attend that one. That's another really valuable resource. And obviously this year with all the changes, that's going to have some additional weight. So keep an eye out for that. That'll be announced shortly. And then we'll have a version of our February Outlook meetings as well. So keep an eye out. Again, those are kind of in the planning stages at this point, but we will have some opportunity to discuss those.
And there were a lot of changes, like you said, both in the tax bill, the one big beautiful bill in terms of farm bill changes and government programs and things like that. So there's a lot of information out there.
And we're going to incorporate some of those farm bill type changes into that February speaking series that we've done a couple of years now.
Okay, guys. Well, as we wrap up, what else should farmers know, either advice or things that they should be watching out for here top of mind?
I think on the soybean side, I'm very optimistic that there's going to be opportunities and that folks are going to be able to pull the trigger and get some bushels moved. The corn side, I'm a little more concerned that we might just struggle to find price points that are attractive to us, especially post-harvest, once we lock the bin doors, so to speak. I just want us to keep in mind the 23-24 production year, and that we kind of got lulled to sleep a little bit with that old crop in the bins, waiting for that rally that really never materialized. And then we were forced to become price takers as we went into our last harvest. So I'm not saying that you need to be ultra aggressive right now, but we do need to be keeping our eyes out. We just need to be paying attention. And if we have a rally and get the price to some levels that we're okay with, especially if we haven't pulled the trigger on anything yet, we need to start laying off some of those bushels. And again, I think I've said this on several of these, but that April, May, June timeframe is typically a very attractive slot for getting sales on, both old and new crop. And I think this year, depending on how harvest goes, that'll remain true. Holding bushels into July typically doesn't work out well. And so let's just keep that in mind as we move forward, because I do think it's going to be a temptation potentially this year on the corn side.
Because there is some good carry in those corn futures markets through the start of next year. So
yeah. Corn and soybeans both have significant carries built into those markets. And so the carries telling the producer, hey, we've got plenty now. We want to incentivize you to store your crop and sell it to us later. One way to lock in that carry is to put on some HTAs. You can or cannot set your basis. If you set your basis, you're essentially just, putting in a forward contract. But if you want a hedge to arrive, you can go out there and you can sell the futures side of the market out in July and take advantage of that carry that's out there, and then wait for basis to improve if that's what you think is going to happen. Obviously, we've seen harvest basis really start to dip here in the recent weeks as the market really adjusts to that supply side projection and realizes we're not going to run out on old crop and we're going to have more than enough on the new crop. And so you're seeing that behavior start on the basis. And so getting that hedge to arrive out there gives you an opportunity to have some basis appreciation down the road perhaps, and kind of get past those harvest economics that tend to drag the basis down.
Okay, guys. Well, thanks a lot. This has been very educational, and we will certainly point people towards the website, Zach, and some of those programs that'll be upcoming.
Appreciate it, Tom. Thanks a lot.
Yeah, thanks, Tom.
Thanks, guys. I'll put in another quick plug for the valuable resources on iowafarmbureau.com. Zach mentioned our recorded webinars on crop marketing and other topics, and you can find a link to all of those recordings down in the notes for this podcast episode. You'll also find links to our schedule of upcoming events and webinars for farmers, and to Iowa Farm Bureau's Cash Bid Search Tool, an exclusive platform for Iowa Farm Bureau members that helps them find the best bids for corn and soybeans near them. And finally, we've included a link to americaneedsfarmers.org. In our previous podcast episode, we mentioned that 2025 is the 40th anniversary of the ANF initiative that started with the University of Iowa football team during the 1980s farm crisis. To celebrate the 40th anniversary of ANF, we're releasing a series of 40 videos with 40 unique reasons why America needs farmers, featuring the Iowa nice guy, Scott Siepker. The website also includes details on how to win sideline passes for the annual America Needs Farmers game at Kinnick Stadium, which will be on October 18th this year, as well as information on former Iowa Hawkeye and NFL star Micah Hyde, who will become the 13th member of the ANF Wall of Honor at Kinnick this fall. Find all of that and more at americaneedsfarmers.org. That's all for this edition of the Spokesman Speaks podcast. We hope you enjoyed it and that you'll join us for our next episode on September 15th. Thank you for doing the work that inspires everything we do here at the Iowa Farm Bureau, and thanks for listening to the Spokesman Speaks.
Thank you for listening to the Spokesman Speaks, a podcast by Iowa Farm Bureau. Check out more podcast episodes at iowafarmbureau.com/podcast. You can also find and subscribe to the Spokesman Speaks podcast in the Apple Podcasts app, Google Podcasts, Spotify, iHeartRadio, and other popular podcast apps. We appreciate your ratings and reviews, and we welcome you to email us your feedback at podcast@ifbf.org.